end of the shutdown and what that means for some people. So a little bit of clarity there. People that were furloughed going to get repaid.
Yeah.
That's good. People going back to work. So some of that normal daily routine will come back into play for those folks as well.
And good opportunity, too, for people to, I think, be reminded about what we missed while the government was shut down. Sure. As an economist, I really missed a lot of that data. Never really realized how I kind of, structure my day and my week around the release of that. And all of a sudden, it was gone. We should be getting that dribbling out over the course of the next few weeks. Some of it will be completely gone. Possibly we will not get an October consumer price index, but we're going to get a November one. So you can kind of fill in the blanks. I'm not too worried about that. In terms of the economic effect, I'm really grateful that they got this deal done in time for the holidays, because we are approaching that period when, for Thanksgiving, a lot of people are going to be booking those flights that maybe they were a little anxious about. Are they going to have to stay home instead of traveling for the holiday? Some of the statistics that I saw is about 9% of all flights throughout the year take place during that Thanksgiving to Christmas period of time. So hopefully the flight schedules can get back to normal here.
Yeah, absolutely. You were worried about the data. I was worried about the air traffic controllers because I do have some travel coming up.
Yes.
And it really highlights the fact that there are some behaviors that can be impacted. We tend to think that, the joke, of course, is the government shuts down, nobody would miss it.
Yeah.
Well, those folks that require, some assistance and from certain programs impacted. Absolutely, right? And then, there's kind of a middle ground in there where we're not really that impacted until it starts to trickle into things that impact your lifestyle. When you see lifestyle being impacted, it impacts consumers, and consumers drive the economy.
Oh,
right?
yeah.
So
Yeah.
if you start to see delays in things, delays in purchases, because of that, not only for those government workers who weren't receiving a paycheck, they're naturally going to delay consumption. But then folks like travel, as an example.
Yeah.
But we, have heard about that in terms of certain things not being able to be approved. For example, mergers and acquisitions, big companies that are potentially merging with other big companies, and some of the government activity needed to help make that possible was in delay as well.
Yeah, there are a lot of things that we tend to take for granted, and it might be a lot of really, really small things. And the regulatory approval was a pretty big one. A lot of businesses that wanted to maybe go from being privately held to trading on the New York Stock Exchange or the public exchanges, that requires approval by the Securities Exchange Commission. And so that was put on hold, the mergers and acquisitions. There's all sorts of other ones in terms of environmental reviews. Perhaps you need permissions. So the government shutdown affected everybody's life in some way, some much more acutely than others. Probably the biggest ones, of course, were the people who had to go without the paycheck. And that does, to me, highlight the importance of having a good financial plan, making sure that you have that rainy day fund. And granted, it had been, 6 years since the last shutdown? And so if you had that rainy day fund, at some point you're like, well, I'm never using this thing. Well, all of a sudden, it wasn't just raining, it was storming for those people.
Right. Great segue into sort of financial planning and tie that together. I like that. Well done. And, I see this in terms of it doesn't matter how financially successful you are, those foundational pieces are still important.
Yeah.
So some of our most successful investors and clients that have amassed significant wealth still need to think about liquidity, right? And they need to think about making sure they protect that. So we may be doing some very sophisticated things from an investment perspective, but we have to make sure that we've protected the short-term liquidity so that the long-term can play itself out, because you don't know what the hiccup might be. Government shutdown, it could be market correction environment. Someday we'll have another bear market. Those things are coming. Maybe you're involved in some sort of private placement types of positions where you expected a liquidity event and it's delayed for a period of time. Interest rate policy can be a driver of why those are delayed sometimes, right?
Oh, yeah, definitely. And in the markets, if you think about this old saying about when the markets are down, it oftentimes gets to the point where you want to avoid those situations where you need to sell what you can instead of what you want to. And so that's that liquidity issue, is there some asset that you have where you would rather hold on to it, but because of a liquidity need, you can't. You are almost like a forced seller. That's what we try to avoid by not just looking at the stocks versus bonds and alternatives mix, but what is right for their liquidity plan and their needs. Building the portfolio to support the plan. Don't put the portfolio first. Put the plan first.
That is so fundamental. And if we can get that right, we improve our likelihood of positive results so dramatically that it's just can't be understated. And it fits in so many ways. But you want to always be in a position where you are selling assets when it's advantageous to you. And take that from a risk tolerance standpoint as well. And how do you make sure that you're building the portfolio with an appropriate risk tolerance that puts you in a position where you can seek to sell investments when it's advantageous to you and protect your ability to not be required to do that when it's disadvantageous? So that's in the face of a market correction, for example, when stocks are down. Make sure you're thinking about your risk tolerance properly to say, I can get through this and wait until stocks are up. That's where I would want to reduce my equity exposure.
That's right. Because that way, if you're in that right mix and it fits your capacity, your willingness, your ability to take risk, your tolerance, then you can stick with the plan. If it is a well-designed plan, you want something that is going to be robust against a variety of events. So you don't want to become your own worst enemy.